Good afternoon and welcome to tonight's presentation, the DTS special event for DTS members, Common Sense. As you saw in the email I sent, I put a little blurb. Here's what it said. Okay, this one will be on the boring side. I'm not sure if it will be or not. I don't know. I'm not always sure. The last couple were phenomenal on the exciting scale. Usually because people love the chart examples and the little educational technical things. But that's not always where the gold is, that's not always where it is. Tonight may not be that, but often I find the boring ones that deal with issues that are the heart of the matter, therefore they are important. All chart lessons are great, but meaningless if you don't understand the underlying concepts. Before I get going, some of you tonight, at an event I did recently, I invited you here tonight. You may not be members yet, so let me just give you a couple of great links that I'm sure the rest of you know because you're members. That's the free stuff page where I suggest you spend a good amount of time. There's great information there. I have self-declared it to be the greatest source of trading information, useful trading information on the internet. And there's a calendar that goes out 2 or 3 months. So you can see these events. Also, everything's on there, but including the free stuff. And if you happen to be here and you're not a member, there's absolutely no harm in becoming a member. You don't even have to give a name. You don't have to give a credit card. You just simply give an email and you will get invites to these all the time, as well as other educational type of emails. And you very, very rarely get any kind of sales thing. Extremely rarely. I mean, in fact, you guys probably can't even point to more than one a year or something. All right. Common sense. As I end up going through this, I end up really kind of liking this. I don't know if you guys will or not, but let's see. I think it's something, and it is particularly, I think, pertinent right now because of a lot of the emails that I've started to receive the last 2 or 3 weeks. I'm actually going to pause about halfway through this and kind of deal with that real quick. Thank you, Cosmo. You're doing a good job as the assistant recording administrator, but we are all set and good to go. I've only skipped that once. I also want you to keep something in mind that if you want to access the prior great events, you can do that at the free stuff page, which I just gave you the link to that. And also that I have been doing an event every 2 to 3 weeks since DTS started going. It'll be 4 years this August. And I can basically say I've never repeated one. I kind of did a replay on a couple where I added some stuff, but almost all new events. So I cover a lot of topics, we do a lot of things, and these are not just, like I said, fun things. The people who take the DTS seminar program with me are required to view all these and to watch all these because there's great information and little tidbits in each one of these, and put them all together and you are getting a good foundation to some things you need to learn to either day trade in terms of day trade the market or trade in terms of long-term invest, i.e. manage your own long-term positions. So let's get going. I want to give that quick little hello out there. Common sense. This is what you got in your email. You can read that over. You did already. Let's just continue on for tonight. My first days in the market. My first days in the market. We're going back to that because the whole common sense thing came to me in an email that I viewed about 3 or 4 months ago, and it's been kind of brewing in the back of my head to do this one. And it kind of took me back to when I started, and actually it takes me back very much to a book that's, I didn't put this in here, but it's by Nicholas Darvis called How I Made 2 Million in the Market. It's kind of along the lines of what I'm talking about tonight, how he started off with the common sense viewpoint and how it didn't serve him very well. So anyways, I had never been involved in the market, as I think most of you know. I had a background in several different things, and most recently I had owned a business. I sold it and had a little bit of money, and not anything able to retire on per se, but enough that I could kick back and try and find something else to do. So I'm not going to give you that part of the story, but I got involved and I opened up an account with somebody who I don't even know where or why, but they were basically an options place that was going to make money by taking options. And this is back even when, they were just calling me, and doing stuff over the phone pretty much. So I got that first big call, and I remember still it was a woman, and she had kind of an irritating voice. Sorry, but she just kind of did. It was like she was like yelling at her kids for walking on the carpet with muddy shoes, but that's the voice she had when she talked to everybody. But she calls up and basically said this, I mean, I almost know word for word. It's August and fall is just around the corner. I'm sure you realize that when the weather gets colder, people heat their houses and demand for heating oil goes up. When demand goes up, so does the price. So we're recommending buying call options on heating oil. Call options on heating oil, right? So again, this sounds like to me like a pretty good common sense thing, right? And keep in mind, I had no background at all in the market. I thought I was a really smart person. And something didn't smell quite right, but I was like, okay, I was out there playing around. You know, small amount of money, fine, go ahead, take out these call options, whatever. And this is the title tonight, common sense, right? What isn't it true? Heating oil is in demand in the winter, and it was summer, and the price will go up, so you make money, right? Right? Does that make sense, everyone? Heating oil is cheap. It's gonna go up in the winter. Everybody's using it. How can you lose, right? What do you mean the market was forward looking? That's kind of a silly comment, but you'll see the point of tonight when I get to the end, because yes, obviously the market's forward looking. So it was September, and the calls were about half their original value. So I get a call on the phone. We're moving out of heating oil, and we're moving into blah 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 because of blah blah blah. And you know, the next phone call was the same thing. It was more blah 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 blah. And you know, I learned something. First month in the market. It says right here, even though I was new, I wasn't surprised that it wasn't that easy. Wasn't surprised it wasn't that easy. So continuing my education, I did something fun. And by the way, there's something coming up here that I was kind of surprised by. I added it last night as maybe the feature of today. Is kind of fun anyhow. So even though I knew I wasn't surprised, I wasn't surprised, blah, blah, blah. I just wasn't surprised. You know, I wasn't a dummy. I was smart, but I had nothing to do with the market. Nothing to do with it. So I decided to find out who knew what's what. And by the way, there's no typos there. That's correct. I decided to find out who knew what's what, right? So I subscribed to 5 different financial magazines. This is back in the day when you got them in your mailbox. Going into the end of the year, they all had some version of, you know, the 25 best stocks of the year, right? So I tracked them. Was that a lot of work? Yeah, kind of. But hey, you know, this is kind of the new career I was taking off on. I wanted to get a footing. And, you know, and even back then, there was really no place that would help you. I mean, it was just, you know, just kind of out there swimming on your own. So I tracked them all. And funny thing, at the end of 6 months, I ran the totals, and guess what? What do you think the totals were? Anybody want to guess? I'm assuming most of you don't actually read the slide. You're watching TV while you're listening to me with just one ear barely. What do you think the results were? 5 of the best, you know, this is Money Magazine, and maybe Forbes had it, and Barron's, you know, these are the, you know, the big names back then, and still today, most of them. Their top 25 picks for the year, gave them 6 months. Yeah, they were, I honestly don't remember it, but they were just break even. Just break even. They had some big winners in there. And of course, when they advertise, and this is of course when I started getting my first lessons, and I guess it is common sense to understand this, but what of course does Forbes advertise? Oh, look, remember when we gave you our best picks? Look at stock, blah, blah, blah. It's up 42% in 6 months. And the other stock, blah, 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 up 70%. Oh, that's what they advertise. And you think they're doing great. But all their stocks, on average, were flat. So 5 places, dead flat. I thought to myself, I'm not sure that's the thing to be doing either. So what sparked all this for me was because I saw an email back in January in, you know, one of my like junk accounts, and it said right here, stocks you should own when Joe Biden gets sworn in next week. And you know, I kind of flashed back to when I was new, and I started thinking, is anybody that stupid? I mean, are we really? Is everybody just kind of sitting around? Whoops, waiting? Like here are all these great stocks. You know, here they are. You know, solar stocks. Here they are. When Biden takes, and we're just sitting there all month long, 6 months, 6 weeks, 8 weeks, just waiting. And then on January 20th, we all buy these. That's what the thing implied, which of course is more than silly. And I was going to leave, this is where the slide was, and I was going to leave it. And then it struck me, you know what? Why not do it again from 22 years ago? Why not go back and take a look at these? And I did. So I went and got the article. Here it is. Kiplinger. They're good, aren't they? I don't know these places at all. Kiplinger's good. I know the name. Kiplinger, good place. And there's the article. 20 best stocks for the Joe Biden presidency. January 20th. And I want to swear something to you. You just have to trust me. I want to swear to you. I did not search this out. I just, this was like an article I saw 4 months ago. I was going to just leave the last slide as it was. And just last night, I just thought, I wonder how they did. I wonder how they did. And I was going to show you the results. And actually, as I started going through them, I was like, oh, well, they're not doing bad. Anybody want to take a guess how they did? Here actually is, here's the article. I'm not, again, I'm not here to make any point other than to help you guys, but here's the article. I'll even put the link in here for you. It's fresh off the press there. How do you think they did? Here's the 20 stocks, by the way. MLM, CAT, ETN, BDX, BEP, NEAY, FSLR, TAN. TAN's actually an index, FSLR. Oh, that second FSLR is Tesla. I corrected my mistake when I was tracking them. I didn't. Some good, some bad. Oh, didn't I? Well, keep in mind, yeah, Stephen, right. The market's been up, right? So we're going to assume these are up quite a bit, but do they actually beat the market? I guess is the case, right? CGC, and what's interesting too. Every one of these, right? Every one of these had like a full computer page, like a few screenshot of the reasons why, right? They had all the reasons why. Huge detail about, and these are a variety of things. They're Caterpillar, Caterpillar and CGC is pot and BRK and solar, of course, solar. Well, solar, geez, how can you lose with solar? These are all slam dunks, right? And this is all it is to making money in the market, right? So the best, smartest people at this top firm at Kiplinger, they sit down and they come up with their best ideas. These are the best ideas to come up with to make money. And their ideas, now that he's president, I think he's going to like solar. Let's buy solar. This is what you get. So what actually happened? Here they are. I tracked them. Negative 1%. Now, in all fairness, I'm not sure, like, I didn't average the averages. I added the total ins and outs. So I'm not really sure mathematically. I'm not like a statistician if I did that correctly. But you know what? Just look at the numbers. It's about right. I mean, plus, who cares? And that's in a bull market. That's where if you just kind of just fell over and tripped, you'd find stocks going up 10%, right? So I think that is just, I was blown away a little bit, to be honest with you. I mean, I knew that's what it was when I started. And I was just blown away that this is what we're still doing, you know? I want to take a timeout for 1 second here for a very special reason. I am always trying to help all of you the best that I can. As you know, I want to make 2 points here. And a lot of you are just free members of DTS. There are, there's a whole world of people out there, and they run across me on YouTube and maybe from other email lists, whatever. And then you can decide to become a free member of GTS, which all of you are, or you wouldn't be here, which is a no-brainer. You just, you get to get invites and all that good stuff. And there's some people who subscribe to some stuff. But I try to help everybody who asks me a question. But I have been warning people for how long, Mark, Stephen, how long have I been warning people about the impending market that'd be coming up? That, I see all the similarities between this and, the year 2000. Back then it was comical, just everybody jumping in the market. Everybody's making money. This is so easy. Anytime something drops, you buy it and you make money. Well, I mean specifically, Carmen, about what's going on this last year. And I've just warned, if you're doing whatever and you're making some money, that's great. If you know what you're doing, congratulations. If you're just out there getting lucky and you may not even know it, just be very careful. Don't get mad and start throwing bad money after good. And I just have to tell you, one of the things I get to have in my position is kind of a pulse on the people, in that I get emails or occasionally a call, and I've just all of a sudden, it just kicked in 2 weeks ago, literally 2 weeks ago. I'm getting emails. Paul, what's going on? I'm losing my shirt all of a sudden. I was doing okay, blah blah blah. And I know exactly what's going on. We're getting to that point in the market when you get like up there, and I think we're going to have one more big rally in here. But we're getting to that point where it's getting extremely sloppy. In other words, money doesn't know where to go is the best way to phrase it. It's not orderly. It's hopping around. It's crazy. It's more mixed in with big money selling, with some other money's coming in, but it's just all over the map. You look at what stuff that's going on. It's just kind of short-term momentum goes up and falls apart, and it's not the normal thing. It's identifiable. I've been doing just great, but if you're new and you're used to doing a one-trick pony, you may have trouble. And all I want to do is reach out to you and just say, hey, just be careful. Caution. That's number one on the little intermission here, is just be careful. Again, I want to remind you of a terrifying number, and that's that 97% of E-Trade accounts went broke over 2000, 2001, by the beginning of 2002, whatever it was. Just dormant, because those new traders all just know what to do. And you may find yourself, a very common thing for people, I'm just saying this in case it fits you, is that if you're out there playing around, there's a lot of people with the Corona thing, they're home playing around, Robinhood and whatever it is. But if you've found that you're making a little bit of money because you have this kind of pocket of big winners and big losers, and you're coming out a little green, I'm just warning you, you're going to end up losing big time. You're being carried by a bull market, and when you erase the huge winners and you're left with little winners and big losers, it's not going to look pretty. And it's not applies to all of you, and some of you know what you're doing. Don't get offended. I'm just trying to shout a warning out, because maybe if you start running into trouble, you'll stop rather than digging faster and faster to get out of the hole. You know what I mean? Point taken. Any questions? Number two, I have a quick question I want to talk about. It's not worth a whole. So we're not. And by the way, I'm in the middle of tonight. That's why it says an intermission. So, but I just wanted to make sure everybody's here and then talk over these. The second one is not worthy of a whole night of discussion. I don't want to make it a topic. Thanks, Don. I don't want to make it a topic. But a common thing I heard several times all of a sudden recently is that the reason people are having trouble is that the market is being manipulated. Let me take a vote here. One or a two. One or a two for whoever wants to participate. One, yeah, I think the market's manipulated, and two, no, the market's not manipulated. What do you think? Is the market manipulated? I have two things to say about it. Number one is this. You'd have to define what you mean by manipulation. Those of you who are saying yes, I seriously want to take a minute and just ask this question. And I mean it in all sincerity. What do you mean by manipulation? Like, what is the manipulation? This is what I have to ask people whenever. Okay, but so AI is okay, it's another player in the game, but how are you being cheated? I mean, see, there's just a difference between somebody's better than us, you, me, or they're cheating. I mean, what is the cheat exactly? Okay, increasing the spreads. Okay. Well, the argument on their side would be is that is a necessary evil because of the risk they're taking. And you have the choice, just don't trade it, right, Daniel? I mean, if you don't like the food at a restaurant, you go to another restaurant. If you don't like the way they're handling GME, go to another stock, right? Because the vast majority, that's not the issue, right? Okay, but Joe, if smart computers do that, see, here's the thing I want to get across. If smart computers do that, that shows up every day on the chart, right? Isn't that true, everybody? In other words, whatever it is that's happening, if it happens all the time, isn't that the definition of how to make money? It may not make sense to you, right? It may not be appealing to you, but if you follow the charts, you see whatever's happening. See, here's what I want to get at, folks. I can either say everything's manipulated and who cares, or I can say nothing's manipulated. But to me, as long as the prices that are printing are really the transactions, which I do believe they are, then there is no manipulation. And this is just my view of it. Intraday, very quick to react. Well, yeah, sure. But Joe, again, you know all that and you can adjust, right? Right? I mean, if you open your cabinet door and a coffee mug falls out on you because the shelf is slanted, and then you do it again the next day, and you do it again the next day, at some point I got to say, hey guys, stop opening the cabinet door, or fix the shelf, or catch the cup, right? You can't get hit in the head 3 days in a row and complain that the shelf's crooked, right? It's the same thing in the market to me. So I'll tell you why I'm harping on this so much. Then don't. I don't look at the screen all day, Joe. Why do you need to look at the screen? I mean, I'm kind of not following you. I mean, you do what you do, and if something is happening all the time that affects what you think the normal flow should be, adjust to it. That's all. Yeah, I day trade every day. I day trade about 90 minutes to 2 hours in the morning, and I don't see this at all. See, would you guys agree with this? Let me just give you an opinion, and then I'll tell you why I think it's important. Would you agree with this? That as long as the prices that are printing in the market that are forming your chart, as long as those are real transactions, there's no manipulation. Could you at least temporarily buy in on that with me? Now, you may not like what makes some of those prices print, right? But here's my thing. We're seeing the end result that's a sum total of whatever it is, right? And that's why I have a problem saying that, well, part of that is manipulation. It's not. It's just what it is. Computers, somebody that's better than you. I mean, how is that different than if some big fund decides they want to buy 100 million shares of stock, and over the next 3 days the stock just keeps ripping up, and you're trying to short it? Is that manipulation because somebody wants to buy it when you're trying to short it? I mean, to me, there's no difference here. The chart is a chart. It tells us what's going on, and we can only be wrong. Correct? We can only be wrong. That's all there is. Now, the reason I'm making such a big deal out of this, and the reason I asked you to define it, is this. Does anybody know my fear about this? Here's the big fear I want you to you cannot do. However you want to define it is fine. You want to be in the market, you don't want to be in the market, that's fine. The reason is because this becomes an excuse for people. This becomes an excuse. And I hate that. And that was the theme of some of the emails, is that, oh, things are being manipulated now, so I can't make money. No, don't tell me that. That's just an excuse. That's just an excuse for the fact that you don't know what you're doing in the market. So don't use that as an excuse. That's all I want to say. Is that it is what it is. The prices, the print are what they are. Things happen sometimes, and they're out of the norm, and that's why trading is about odds. It's not about guarantees. Well, that's true, Mark. You ever hear me? Kind of akin to this. I never made a big deal out of it. When I do the Introduction to Mastering Technical Analysis class, which all of you were invited to. We just had one, so the next one won't be for about a month. But when I get to that spot about, the equipment you need and, you should have your own little space or office, I always kind of make a joke saying, you probably don't really need your own office, but it will prevent you from blaming someone else. Remember me saying that? I say it every time. Anybody remember that? Yeah, and I really mean that seriously, because it's like, if you have another excuse, oh, my spouse came in and asked me if I got the mail yet and I missed my stop. No, you didn't. Come on, knock it off. As long as there's an excuse, you're going to blame. But you got to stop all the excuses and just look at what the issue is. Do you know what you're doing? Do you know what you're doing? You're absolutely right, Joe. I mean, absolutely part of it is money management, money risk. Absolutely, absolutely. That's like the biggest part of it. It really is. I think you need an okay knowledge of charts and excellent money management. I've always said, I said it this morning, I'd rather have a great entry on an okay strategy than a okay entry on a great strategy. And the third quick thing that I found out from hearing from a lot more people this last 2 weeks is something that I push this so little that some people don't even know it. Somebody actually asked me, they love the free stuff page, and they want to know if I knew anybody that could help teach them how to read charts. I was like, yes, I do actually have a seminar program here, and I have a trading room, and I have a long-term letter, and all of them are fantastic. So those are all paid for services, though, and I don't like making a commercial out of it when I talk to you guys. So I assume you knew that, and you can go to the website and figure out how to participate in any of that stuff if you want to. And if you can't figure out how to do it, you probably shouldn't be there in the first place. All right, next one. I'm going to move on. Was that an okay talk? We okay, everybody? Was that all right? I just feel an absolute obligation to have said those couple of things, because it's just in the spirit of trying to help everybody. Because you know what, guys? We're going to come in to a extremely difficult time. Extremely. Next year. I mean, I can't pinpoint the day for you. Some people have been saying it for 8 years. I've been bullish until recently, and there's going to be a time coming up here where things are going to be ugly in a way like you've never seen before. All right. Well, it'd be fine for people who have a clue, but I just mean for the average person out there. You want to hear a prediction from me? Here's a prediction. Somebody write this down. By a year from now, there are going to be, or 18 months, there's going to be bills introduced to completely regulate, legislate the stock market because it'll have done such damage to so many people, and it's going to be considered to be such a crime spot. That's what's going to happen. But anyways, next, let's move on. Draw a line. Let's move on next. Here's a fun one, and again, just a common sense thing. There was an article written, and again, you see this every day to some degree, but this is just such a classic. There was an article written December 27, 2018. Why am I going back to that? Because this was just the most sound article. This is guy, I don't know the guy, but some people know him. They said he's just a genius. Trefis team, right? And I'm not picking on anybody. This is an article that's out there. Again, there's the link to it right there. It was Forbes, obviously, classy magazine, December 28, 2018. And he went through a huge article disassembling Best Buy, explaining why in great detail Best Buy was on the way to bankruptcy. Why? Well, obvious reasons. Brick and mortar is not going to work anymore. Amazon's killing everybody. People walk into Best Buy, push the buttons, test it out, and then go order on Amazon. You know, brick and mortar salespeople, the whole thing. You read the article, absolutely could not disagree with the person. Smart guy, common sense, right? Absolutely, positively. So let me show you the chart of Best Buy and when he wrote the article. Common sense. This is a piece of cake. You see that? See that bottom of that green bar right there? If you take a magnifying glass, you see where I'm pointing? And if you blow that up and you go maybe just a few pennies off the low, that's when he put the article out. And that's why I love this one, because it's hysterical. I mean, you can read the article, you can check your chart. I'm not making this up. He literally called Best Buy going to zero almost within 5 minutes, if I'm exaggerating by an hour or two, of the low forever. It doubled in the next year. Approximately, it was below 50, it went to 90, and is currently at 118.69. So again, I'll sum it up at the end why I'm doing all this, but there's the common sense thing. How can you go wrong? Of course Best Buy is going to go broke, except they're not. So I had to try and get in. Well, read the article. He'll explain why. It made perfect sense at the time. All brick and mortar is going bankrupt. Didn't you know that? All brick and mortar is going bankrupt. But the point is, one of the smartest guys on Wall Street wrote an article that was perfectly justified, well accepted, that Best Buy is going to zero. And he wrote it on the same day it hit an all-time low, right? Why did it go up? Because more people wanted to buy Best Buy than sell it. That's why. That's my whole point, Joe, is we do not try to focus on why. We don't focus on common sense. We don't listen to rationale. We don't listen to fundamentals. We don't listen to people going blah, 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 because they all have their own reasons. We look at the truth and what the chart is doing. If the chart isn't clear, we go to another stock, entity, commodity, forex pair, whatever it is. So I had to try and get a gratuitous chart in here somewhere so you guys don't fall asleep on me totally. I warned you it's going to be, this is a more boring one, but I looked this up for fun because there's a stock I traded yesterday and I knew it had had a big move and I thought, hey, that probably was a news event. And sure enough, Clean Energy, this is CLNE. I call it Klein because it's CLNE. I just make up stock names when I look at them. But it's actually Clean Energy apparently. They signed a big agreement with Amazon. You know, they're maker apparently of clean fuel. I'm just reading what you are there. Big deal to supply Amazon. Huge deal. Congratulations. The stock went up in reaction to the news. Great news. To be honest with you, I don't think I saw it on Tuesday. You guys in the room, you have to remind me. I wasn't focused on it. Maybe I saw it on the gap list and just said forget it because I wasn't clear. But what I want to point out is this. So there's the chart. This is 2 days ago. And this thing is going to open right there. Open at $14 on fantastic news, right? So where's it going from there? Well, let me ask you, if there's the gap, where's that going from there? Any gap readers in the room here? In the resistance? Over a lot of stuff? Well, on this gap, I really don't know. I mean, most gaps that happen. You have to remember, guys, as much as we want to glorify technical analysis, we're looking for the anomalies most of the time, right? We're not sure. There's a thing in the gap class I teach. There's a slide that says, hey, when something gaps up, it's not when it opens. There is no immediate bias. It's opening in perfect balance and harmony. It gapped up $2 or whatever because of the imbalance, and now it's opening in perfect balance and harmony. So you can't just assume it's going anywhere. And this particular gap, I don't know where it's going. As a matter of fact, I'm sure this is on a list I looked at, and I didn't even put it on my watch list. I just said whatever. But what was interesting is that after the day, here was the reaction to it. Whoops, there's the reaction to it. See it? So it had this huge red bar on day one. And when I saw it the next day, it was on my list for this day, for this red bar. And you guys in the room remember, do you remember when I showed this to you before the market opened? I said, this is really bearish. I mean, this stock is going to come falling through. And of course, the novice view of technical analysis for somebody to say is that, oh, gee, Paul, the gap fill is support. No, the gap fill is not support. There's some gap fills can be support, but a gap fill is not support. That's just one of those funny things people say when they're bored. So I actually had on the screen this day, and this is not again, it's all about patterns to me. And this, I ended up actually shorting this stock. So great news. Don't care what that is. I didn't even know it was great news. I didn't know there's news at all. All I know is here's a chart pattern that tells me that people are going to need to sell this thing more than what they have already. So I actually shorted this developed what I call a power trend pattern. It's become one of my favorite patterns. You know, I obviously have a whole what do you want to appendix, if you will, of patterns that I know and I like, but they're not necessarily my favorites. This over the last 2 years has become one of my favorites. The thing is, you don't see it that often. But on like a 15-minute chart, 5-minute chart, this went into a power trend. And actually, this turned out to be a great trade. But again, the whole point is that good news, bad news, what people say, gapped up, gapped down, it's all in the big who cares land. You know, none of it matters. It all reduces down to a chart, what you see on a chart, and how you can read or interpret a chart. That's all there is to it. So this was one of the nice trades from yesterday. It didn't make a ton of money. It made like a little over a day's profit, hour and a half or something, or just over an hour, whatever it is. It's in three parts here because it was sold in thirds. And with this type of pay on a power trend, I always take a cheap first target, and then it's kind of a free trade, and I let it go. Let me see some notes here myself. So for anything, whether it's news, a comment, a big move by the stock, it's not what happens, it's the reaction to what happens. That's all we always want to see. And the reason it's the reaction what happens is because I don't know anything until I see the bulls and bears fight. Until they fight, I can't make any decisions because I don't know what may happen. If the bulls are moving things ahead on some event, some news, whatever, what is going to happen when the bears say this is enough? That's what we're always doing in technical analysis. It's simply monitoring the battle between bulls and bears across the 4 pertinent time frames that matter all the time. So again, common sense doesn't matter. Best contract in the world, couldn't be better news. And by the way, this one was not built into the chart really. I don't think it was. Let me go back a minute. I mean, that wasn't right. It wasn't like the chart ran up into this news announcement. I mean, it wasn't built-in news. I don't follow these things. Maybe it leaked out over here. I don't know. But whatever it was, I wouldn't have known what that gap was. And by the way, if I was going to play that gap, there is a way I play it. This is in the category of being a unique gap that gaps to a target basically, and you initially think short with a little pop and drop entry type of thing. Oh, take a poll. When's the last time that I read a news article to determine how bullish or bearish the stock would be? Go ahead, go. The person who gets the closest, and I'll give you plus or minus 4 days. Person who gets the closest gets a DTS t-shirt the day they're printed. I may have my opening 3-4 months of trading, but it's been over, I mean, I don't know, what I've been trading, 22 years or something. So it's been over 21 years, yeah. I got you, Eric. I apologize. Yes. Well, I'm obviously as a human being, I mean, I like to read stuff, just know what's going on. But I mean, in terms of like, if the stock gaps or moves and you go read the article to find out what's going on, that is not only incorrect, it's detrimental. We've had other discussions about this and exactly the reasons why I believe some people think that it works because of correlation and not causation. But I can assure you that looking at that stuff is not only not necessary, it's detrimental to you. It's just detrimental. It has to be. I've proven it before. By the way, if you want to hear more on these topics, when I do the Introduction to Mastering Technical Analysis class on, it'll be in about a month from now. And you can see at the calendar, the link I gave you. If you go there, you can see when the next one is. But I talk a lot more about that stuff there. Michael, just for you, sure. Well, actually, you can see it on the recording too, but just for you because it's such fun and we're good on time. Right there. There they are. You might want to blow up your screen by hitting a button up top there. And again, I just added the total buys and sells. I don't know if that's the same as averaging averages or not, but so it may not be mathematically correct, but it's within a percent or whatever. Point is, they didn't do anything. And it's just so hysterical, you know, right? That it's like the last time we did it was 20 years ago. It's the same exact result. It's just hysterical to me. Whoops, where are we? Oh, geez, wow, we're way past where I'm supposed to go. Oh, yeah, I have another good point here to make. And of course, the point of that is that you can learn to do better for yourself, absolutely. And if you don't want to learn, you can just follow. I mean, again, I have a letter that's doing great, and I have a trading room that does great, and you can follow along while you learn. You can learn, then follow along, whatever you want to do. But just don't go, you know, reading articles like this and think you're going to make money that way. It hasn't changed. So that was the poll. Next slides. All right, common sense is the topic for tonight, right? So I want to walk through, I'm a good, smart, common sense person. I want to walk through something with you that's always bugged me. You ready for this? This is a group of restaurants, okay? I'll tell you the name eventually. And this is the monthly chart. I just want to show you that they have been up tremendously over the years, right? So this is 2013 to 2019, and they're up here at $120. And I stopped it there just right before coronavirus, okay? Everybody follow this chart with me? This is a restaurant group, and they went from 40 to 120 over 5 years. Nice, beautiful, uptrending pattern, beautiful chart, but very, you know, they're up there. It's not like this is, you know, it's not like this stock was beaten up before. So notice we end right at about 120 bucks, okay, going into 2020, all right? So now I'm going to switch you to a weekly chart and pick up from there. So there's 2020, where we left the monthly chart, right? You follow with me? And then we come along, boom, and then coronavirus, right? Coronavirus, boom. There's the bottom. Thank God, right? So here's the question that if you listen to any regular news show, story, program, if you're just a human being and you listen to nightly news or whatever, you know, the big question people keep saying is the economy, stocks, you know, how much do you think we'll get back to normal, right? How much do you think we'll get back to normal? So if we were way up here and that was already a very lofty price, think about it. Give me some, how, you know, will restaurants ever come back, guys? What, you know, I don't want to get into a big Corona thing, but just think to yourself maybe, you know, will restaurants ever come back to what they were? I know they do some drive-through, but if you're, you know, I'm very familiar with restaurants. I owned a restaurant, and you know, they're hurting. I mean, you can't make it up in drive-through. You can't make it up in takeout. Come on, you just can't do that. You know, your add-on sales, being there, drinking, you just can't do that. And are there people that are never going to go back? You know, I don't know, and I don't really know the answers. I don't pretend to. I'm an idiot about this stuff, and you know, anytime I try to make a prediction about this stuff, any of my predictions, and you know, just general business, political, I'm a mile off. I don't have a clue. But this is the question that intelligent people ask. You know, how far? So when we start coming back, look at the screen now. Is that enough? We've come back a third of the way from all-time highs. Is that enough? I don't know. I'm not sure. Common sense says, I don't know, right? Rightly, maybe. I don't know. I don't know. And what if, you know, isn't there a built-in thing? What if another one comes along? What if another virus comes? Are we shutting down again? I got to tell you, I wouldn't want to be owning a restaurant today, even if things get back to quote-unquote normal, right? So they keep coming back. Whoops, how wonderful. Look at this, and look at this. Is that it, guys? What do you think? Look at that chart. Think about common sense. Think about, you know, where we are. The restaurants are halfway back. And again, this is a very lofty price. This is, a 12-year rally high. Can we actually get more than halfway back to the old high? Can we? I don't know. Look at this. Well, certainly. That is unbelievable, right? Is that incredible? I mean, we're back to almost $110. That's almost a total recoup of and guess what? You know where we're going, right? DRI. Common sense. How does that work? That's why we follow charts. That actually it happens to be just a beautiful uptrend all the way up there, the whole way. Pretty flawless, right? Yeah, Daniel, he got that right off the bat. And DRI is a group of restaurants. I think they own, well, they own Red Lobster in Olive Garden and a whole bunch of others. I don't know the others, but so I'm just leaving that as a question to you. Common sense. How does that work? How do you use common sense to make money? I think I got one more thing for you here. And I'm sorry I had to put this. One in here. Um, I just did. Again, you can hate me for it or whatever, but this always just cracked me up. Some big free stock forum chat room, and people who don't know what they're doing go in there, and they ask, "What do you think of this stock? Do I need to go on?" A room full of people who don't have a clue what they're doing, and they're asking each other what they think of stocks. I mean, this is the common sense thing that says, do you really think that there's some value to doing this? I mean, even if for some reason you got the right call one day from somebody who doesn't know what they're doing either, I mean, how do you reproduce that? How do you know what I'm saying? It's just one of these things that just drives me crazy because they're fairly popular, and I just mean in general. You go out there and there's different places that have places where people can get together and talk about stocks and groups, and it's always, what do you think of this? What do you think of that? I mean, who cares? Who cares what anybody thinks about any of your stock suggestions? It's just, I don't know if some of you can even be on the mindset I am to be saying this, Yeah. Yeah, well, that's because they had a plan. I don't have a problem with a room having a plan of what to do. I just mean these people that get together and say, hey, what do you think of this? What do you think of that? All right. If you like the topics here, and again, I think this is an important topic. If you read the introductory thing, it really addressed the fact that I feel, and again, this is just from working with people for years and trying to train people and help them. One of the biggest demons out there is called what I call the Holy Grail. People looking for the Holy Grail, because again, it's that shortcut. It's very similar to um, people who call manipulation or who have excuses. I mean, it's the Holy Grail. It's just simply find me a short way to do this. And you know what? There just is not any one thing. There's lots of stuff people look at maybe has some bearing, some relevance, but it's putting it all together in an intelligent way. You know, common sense. What's the Fibonacci number, somebody? What's the Fibonacci number? The one in the 30s. This would be kind of my final point here. That's not it, is it? 31.8%? Well, I'm glad you guys don't know, actually. I'd be a little scared if somebody knew it exactly. No, it's to the two decimal places. It's to two decimal places. But whatever it is, do you really think stocks will stop at 38.2%? Do you really think that's how it works? Do you really think that big money, the people that make the charts, the people that make things move, do you really think that they're looking at 38.2% when they buy some? They're not. The concept is good. In my class, I teach a retracement concept, and the title of the page says Fibonacci's a good guy. He's just a little too anal, I mean, the concept that if something's moving up, that there should be a limit to the amount it pulls back because you have only profit-taking selling and not outside hard selling, and all that works out mathematically, and there's a concept that should work. But to say something to the 10th percent is insane, and that's what people look for. So they're looking for a buy point that's based on some magical made-up number that just doesn't work. The truth of it is, in technical analysis, we combine a whole bunch of different things and converge them to an area to say, here's the highest probability thing we got going on. The grass is always greener. is an article I wrote. And you know what? This should be on the free stuff page. I went to look for it, and I don't think it is. I'm not really sure. So I have the link for you here if you care. But it's kind of good reading to follow up on this. Again, trying to eliminate a demon. That's a huge link, but if you click on that, you'll get the email that went out a long time ago, and it should go on the free stuff page at some point too. So most are not Ray Fisher in the system. Well, Joe, you can be any kind of trader you want. You can be right 30% of the time, Joe, and kick butt. You can be right 20% of the time and kick butt. You can be right, and here's the common thing, Joe, be careful. You can be right 65% of the time and lose your ass. It has nothing to do with batting average. It has to do with your expectancy, your combination of batting average slash average winner compared to average loser slash chance that it'll all happen. Yeah. So you're right. I call it the moment in time concept. I call it not caring about being right or wrong, but caring about making money. It's all the same concept to me. All right, grass is always greener. What's left? That's it. For those of you who want to day trade, I always put the slide at the end. And again, this is just if somebody trying to offer a service out there. I'm not part of this, but if you want to day trade and you don't have the $25,000 account liquidly available, I don't want somebody day trading that can't afford to do anything. But I mean, if you just have the money tied up in house or other accounts, you can day trade with as little as $3,000. And if you want to, and no hoops, no fees, no tests, no levels. You could be trading in 2 days, and if you want to, you can lose all your money in a day if you want to. And if you want information on that, you have to email me, and I'll send you the information. Again, I'm not part of this. It's not DTS, but I know these people very well. 100% perfect recommendations for them. All right, guys, closing comments, and we're out of here. Have a great evening. Those of you in the room, I'll see you in the morning. Otherwise, check the calendar for the next free event. Take care, guys.